everyone taking the time to attend today. As we say, we'll be going through the journal today and looking at how we can use the journal to correct errors within the accounting system. So it is quite a hot topic on level 2, and realistically it carries through to level 3 rather nicely as well, because it is typically a topic that people do struggle with on both. So adding a little bit more detail, hopefully, as we go through. And as Jane said, if you've got any questions, please do pop them in the chat box and we will pick those up at fairly regular intervals. So let's make a start and have a look. So the first thing that I want to look at is what can basically cause these errors. So what errors can occur within the accounting system? So we'll have a look at each sort of common error and explain just a typical example of where that may occur. So the first one, we've got 2 debits or 2 credits. So this is fairly self-explanatory, but this would happen where we've accidentally put in 2 debits or 2 credits rather than a debit and a credit. We should hopefully be aware at this stage that for our double entry, we need to have a debit and a credit, and they need to match up. So obviously, if we accidentally enter 2 debits or 2 credits, they're not going to match up. So a typical example, let's say we'll keep it simple, is if we were entering in a rent transaction where we paid for rent, we should debit the rent account and credit the bank. It would be like debiting both the rent and the bank account. Okay. We then have single entries transactions. So this occurs when we only put one half of our double entry in. So sticking with the rent example, for example, it would be if we just debited rent, but forgot our bank transaction. So forgot our credit entry, or vice versa. So we put it into the bank as a credit and then forgot to enter it into our rent account. So that would cover single entries. We then have what's called reversing entries. So again, kind of in the name, it's where we've reversed our double entry. So where we've entered in the debit by accident as a credit, and where we've entered in the credit as a debit. So again, going back to that rent transaction I was talking about, it would be, for example, if you'd credited the rent account and debited the bank account. So where you've reversed your debits and credits. And then the last one is where we put it to the wrong account. So this could be, just as an example, if you've got motor expenses and we'd accidentally put them into, say, the motor vehicles account, or we'd put them into another expense account. Now, there are other errors. It's possible to necessarily cover every single type, and we sort of deal with them in fairly similar situations as well. However, these are the common ones that I would expect to see come up throughout your studies. So what we'll do is we'll dive into a little bit more detail in terms of what these are and how to correct them. So first of all, why do errors occur? And the general reason here is human error. So obviously we know that there could be a number of reasons why, in terms of why that would happen. Someone's rushing, they maybe don't have the technical skills, so they're not sure on what the entries are supposed to be. Time pressures, etc. at month end will be a typical one. And errors do occur, unfortunately, within the finance system. It is inevitable. But it's knowing how to identify them, correct them, and mainly stop them in the first place, obviously being the ideal situation. So with your modern day account systems, they do have certain protections in place which are helpful to try and help you prevent them. However, it doesn't always work. So for instance, you might have within your system an option that you tick to say that you don't allow single entry transactions. So the system literally won't allow you to post, a debit entry without entering in a credit entry. However, it's still important that we know how to recognize, how do we actually correct those if they were to occur. Another option for protections, you could have something like where I used to work, you need someone to approve your journal entry when you're entering it into the system in order for it to be entered into the system. That way, 2 pairs of eyes, just allows that to be checked before it is entered into a system. So this is really, really important from my side because well, for me, not everyone will agree, but for me, one of the big reasons why people struggle with corrections is because they struggle with double entry. So if you can't do it in the first place, obviously it's very difficult to then correct it. Because if you don't know how to do it, like I said, it's very then difficult to sort of identify, well, what's gone wrong and how do I get it to a position where it should have been in the first place. So what I thought we'd do is have a little brief revision of what double entry is and the best method, well, for me anyway, of remembering how it works and etc. So we've got pearls for me. That's the way I do it. I know some people use dead click. I tend to stick with pearls. It doesn't matter which method you use. If it works for you, stick with it. Now, the important thing to recognize with this, and I think it's where some people do go wrong, is that every account can be debited or credited. So I think there's a tendency to sort of go, right, purchases, they're a debit, expenses, they're a debit, assets, they're a debit. Okay. Now, the problem with that is that when you then come to correcting errors, you almost put this barricade up because every single account can be debited or credited. It's how accounts behave, which is what's important. And using a tool like Pearls or like DeadClick really helps to sort of understand how they behave. Okay, so we can see on our T account here that on the debit side, we have the categories purchases, expenses, and assets. Now, these particular accounts will increase in value when we debit them, and they will decrease in value when we credit them. Okay, so we can see that they can all be debited or credited, but they increase in value, i.e. if we were to incur an expense, we would debit the expense account, increasing the value within that account. If for whatever reason we needed to take that transaction out of the account, then we would credit it, and that would lower the value on that account. We then have, on the opposite side, on our credit side, we have revenue, liabilities, and shares. So again, these are three different categories. So your typical revenue will be such as sales or any sort of income. Now, these accounts increase in value with a credit entry and would decrease in value with a debit entry. Okay, so typical examples, like say for purchases on the debit side, we would expect to see goods that have been bought for resale by the business. Expenses, we've got, insurance, rent, motor vehicle expenses, insurance. Assets would include both current and non-current, so that would be such as motor vehicles or buildings. Revenue, as I've said, we'd expect to see sales, any form of income. Liabilities are what we owe, so we'd expect to see such as trade payables, which is what we owe to our suppliers. We would expect to see such as loans, for instance. And then shares you may have come across, shares you may not have. It's also another name, really. I'm not going to go into detail, but another name really for capital, or you may have seen it as equity. So it's effectively what the owners have invested within the business. But shares works a little bit better than capital when you say pearls, because pearl doesn't quite have the same ring to it. So, but they work in the same way. Shares, capital, equity. It's what the owners have invested within the business. And like I say, on that side, they would increase with a credit and decrease with a debit. Okay, so this falls as a good place really to answer any questions. Jaden, I don't know if we had anything in so far.
Let's have a look. Nothing so far, but what we'll do is we will give it, another few seconds just to see if anyone does have any questions. So yeah, if you guys have any questions about anything that's been covered so far, let us know and we can either go back over it, clarify, whatever you need. But if not, happy to proceed. But yeah, let's just wait very briefly to see if anyone's got anything so far. Oh, we do have a comment, not necessarily a question, but someone says, very easy to follow, lovely presentation, amazing tutor. So high praise for yourself. And yeah, great explanation. I mean, yeah, people seem to be happy. So
Good.
yeah, I think we
Excellent.
can
Thank you.
proceed.
Thank you for that comment as well. It's lovely. We'll keep going. Any questions? Just pop them in the box. So let's move on to what a journal is then. So a journal is classed as a book of prime entry. So again, I'm hoping at this stage that you've seen when we're doing sales, i.e. recording sales transactions, recording purchase transactions, they go through your sales day books, they go through your purchase day books. The same for our returns. So sales returns would go through the sales returns day book. However, we have a number of what we class as irregular transactions. Now, this would include correcting errors, which is what we'll be covering today, but we also do have a number of others. Don't necessarily go through them at level 2, they sort of sit more within level 3, but there are a number of what we would class as irregular transactions, and all that means is they don't go into those other books of prime entry, so your sales day book, etc. So the journal is our book of prime entry for those irregular transactions because we still need to log them somewhere. Okay, so what is the format? And I think this is something that actually people do struggle with to start off with. They sort of get the double entry to a certain extent, but then having to put it in a journal format does take a little bit of practice. So let's get up an example. So we've stuck with journal reference 001. So we'd always have a journal number wherever it be. Now, this isn't a fixed representation, so you can change the format slightly. However, it should contain pretty much all the information that I've included on here. So we can see that we'd have the date, we'd have the account name, we'd have the debit and the credit values. We would have a description, which is really important, of what the journal refers to. Tell you, when you're at work, I'm sure you will come across a journal at some point that's been entered in on system. It has no description at all, and the person has left the organization, which can be a bit of a nightmare because you don't know then what it's actually referring to. So having that description, very important. Or if any of you have to go through an audit at any point, again, the auditors will want to see what those journals refer to. So we need a description on there. We need the debits, the credits, and the account names. So that's our format. So now let's have a look now at an example scenario, and we will go from there. So ABC Limited is working on their September month-end accounts when an error is spotted. Payment of rent for £14,000 has been entered as debit insurance of £14,000 and credit the bank account for £14,000. So we need to look, right, what should have happened and what has happened. So we can look at this, we can see that it's payment of rent for £14,000 and it's been entered in the insurance account. Now, we also need to look at the other transaction as well, which is the credit to the bank. Check if that is correct. In this example, it is correct because the payment would have come out of the bank account and it is for the correct amount of £14,000. So the bank entry is correct, but the insurance entry is incorrect because rather than it going to insurance, it should have gone to the rent account. So now we've identified what has happened and what should have happened, we need to have a look at the double entry to correct that error. So we'll start off by looking at it in the T accounts because I really do recommend, particularly in your exam, if you've got a piece of paper, writing out your T accounts, it really does help. And what we'll do is we'll look at the entries in the T accounts, and then we'll look at how that would also look within the journal. Okay, so let's start out with what's actually happened. So we've debited the insurance account for £14,000 and we've credited the bank account for 14,000. So we're happy with the bank entry, but what we need to do is clear that insurance account, and we need to have 14,000 instead on the debit side of the rent account. So in order to correct that, we would start off by crediting our insurance account. Now, by crediting the insurance, you've lowered the balance on that account back down to zero. Okay, so our debits and credits now match off against each other. So the balance on that insurance account is now zero. Excellent, because we don't want to record it in insurance. Our bank is still correct at £14,000. So the other half of the entry would be to debit our rent account. So what we've done, our double entry, is to credit the insurance, lowering it down to zero, and we've debited our rent account for 14,000. So the balances now on the two accounts are, we've got a debit balance of £14,000 on our rent account, as we wanted it to be, and we've got a credit balance on our bank of 14,000, which again is what we wanted it to be. Okay, so nice piece of simple double entry there to correct the error. Now, how would that look in terms of the journal format? So you can see we've stuck with journal reference 001, but we've got rent of 14,000 as a debit entry, and we've got the credit entry there in our insurance account for 14,000. And then we've entered in the description as correcting rent posted incorrectly to the insurance account. Okay, so hopefully not too complicated. I think again, it's probably a good point at which to stop, just in case anyone does have any questions. And then we'll go on to looking at what a suspense account is. But Jaden, have we got any questions coming in?
Yeah, we do have a couple of questions, but again, just want to highlight, if anyone else does have any questions, now's the time to ask and we will go through them. But we'll start with this one. So Shelley has said, I'm struggling with reasons why the RLCA might not agree with the total receivables ledger accounts, and the same for why the PLCA might not agree with totals from purchase ledger accounts. Do you have any tips?
Yeah, okay, okie dokie. So it's a slightly different topic, still on level 2. And I know that one in particular has always, that type of question has been around for years. Great question, notoriously one that people have struggled on. Okay, what you need to do, and it comes back to understanding double entry well. I'm not going to be able to go through it in full on the session because it's almost a session in itself. However, just as a tip, what I would do is you need to write down both balances. So let's say you've got the RLCA, so your receivables ledger control account, and your balance on your receivables once you've added them all up. Get them down on paper, the two different balances. And then I know what it does is gives you a list of reasons in the scenarios, doesn't it, for the practice questions. And you have to basically decide which one it could be. Okay, what I would do is basically look at each option and think, if I were to do that, is that going to bring the balances closer together, or would correcting that take them further apart? Okay, and what you'll find is that there'll be one option that brings them to the same balance. Okay, like I say, it would be obviously a lot easier to show it on screen rather than trying to just describe it, but hopefully that has given you an idea of how to approach it. Because usually, if you've got a correction where it's something like, I don't know, discounts have been entered in twice, try correcting it. And if you'll notice that it takes the balance of that particular account either higher or lower, and you obviously want the two to match up. So that would be the way that I approach those questions. So hopefully that has provided some guidance on that one.
All right, many thanks. I think perhaps on a similar topic, Natalia asked, payable accounts, is that the same as PLCA?
Just repeat that one for me again, Jaden, if that's all right, please.
Yeah, no problem at all. So she said, payable accounts, is this the same as PLCA?
Not quite. No. So your payables accounts, if we took that in the individual sense, is usually your supplier accounts. So your individual suppliers are your payables accounts. They're the ones that you owe money to. Now that will have its own separate ledger. Okay, so your purchase ledger will basically be a whole list of all the different suppliers that the business has, and all the amounts next to them that are owed to those particular suppliers. Now, the PLCA, which is your purchase ledger control account, sits within your nominal ledger. And what it does is it summarizes all those individual accounts and puts the balance into one account. Because you can imagine, if you had every single supplier in your nominal ledger, it would be enormous. So what you want to do is you want to summarize them and put them into the control account as a balance, and that way it doesn't clog up your entire system. Okay, so it's supposed to mirror the two effectively, so that if you added all the balances up on your payables account, it should come to the same balance as what's in your purchase ledger control account. Hope that one answers that one, but again, if you're still not sure, just let me know.
Okay, perfect. And final one, Alex has written, so a credit balance of revenue is a positive position?
Correct, yes. So if, for example, you've got £14,000 on the credit side in your revenue account, that's you've earned or you've sold £14,000 worth of goods or services. Okay.
Okay, we do have another question. Do we have time, or do you want to save that?
What are we on? I had to sort of throw my phone away. So I've not got the time because it activated Siri partway through. 20, yeah, we've got time for one more. Yeah.
We've got time?
Yeah.
Okay. Abdullah has asked, what is the difference between ledger, accounts, and journal? And which is the first step out of the three?
So your ledger accounts are what's shown on screen now. So your insurance, your bank, rent, any account such as the one shown on here, go into your general ledger, or you may call it nominal ledger, general ledger. It's the same thing. So within your nominal ledger, you will have a list of all these different accounts: your insurance account, your bank, your rent, your purchase, your sales, PLCAR. It's a huge list. It's what you would expect to see in your trial balance. Okay. Now, what you're doing is with the journal, you are putting a transaction in like the one shown on screen now. So what I would do is I would write out this journal, and then I would post it, what we call post it, on system. And by posting it into the system, it would go to our rent account within the ledger, and it would debit it for 14,000. It would then go to our insurance account, a separate account, but within the nominal ledger still, and it would credit that account for 14,000. So hopefully, again, that answers that one. But if you're not sure, just feel free to come back on that.
Okay, perfect. We do have a couple of questions, but I'll say let's run through it. I'm gonna take note of them, and then, of course, if we've got time during the next break, I will then pitch them to you.
No problem. We've only got sort of a little bit on suspense, and then we've got another example scenario. So we should have some time for questions at the end. So fingers crossed, should be fine.
Okay, perfect.
Okay, let's move on then to the suspense account. So what is the suspense? So we've spoke about already that your accounting system is made up of debits and credits, and they have to equal. Okay, that is the whole point of your accounting system that makes it work, that your debit entries need to match up with your credit entries. Now, if they don't match up, what the system will do is it will automatically force them into matching. And they do that by creating a suspense account. Okay, so as a very sort of simple example, if you had debited something for 10,000 and forgot your credit entry, what the system would do is go, oh, we can't have that. We'll create a suspense account for 10,000 on the credit side so that it balances. Now, what we need to be able to do is be able to use that information and again, use that when correcting errors using the journal, because you will get more than likely, or could get, should I say, both scenarios. One where you don't use a suspense, like the first example that I've been through, and one where you do get a suspense. So again, we're still with ABC and we're working on our September month accounts. And we've spotted another error. A suspense account balance for £4,000 has been created. Further investigation has revealed motor expenses for £2,000 has been credited to both the motor expenses account and the bank account. Okay, so this is the scenario that has occurred. So we've credited the motor expenses, we've credited the bank. Now, we know that motor expenses should be a debit entry. So it should have been 2,000 debit to our motor expense account and credit the bank for 2,000. Now, obviously, what's happened is we've put credits in to the amount of 4,000. So 2,000 plus 2,000, 4,000. So what the system would do is it would create a suspense account to balance your accounts off. And that would be for 4,000 so that our debits and credits match up. Now, the bank entry here would be correct. That's not a problem. It should have been a credit within our bank account for 2,000. But the motor expenses entry, we know should have been a debit. Okay, so our job when we need to correct these is to bring our suspense account down to 0, because there should never be a suspense account balance. And we need to bring our motor expenses up to a 4,000 debit position. Okay, so to a 2,000 debit position. Now to do that, again, I'll show you the T accounts and how they go in, and then I'll show you it in a journal format as well. So let's have a look at what's happened first. So we've credited our motor expenses for 2,000 and we've credited our bank for 2,000. And that has forced the system to create a suspense account for 4,000. So to correct this, we do it in 2 parts. Okay, and the temptation is not to do it in 2 parts, particularly once you get sort of quite competent at these. You want to skip ahead because it is feasible to get the correct result with one transaction of double entry. However, I'll explain why we don't want to do that. Okay, so part 1 of this will be to clear the original mistake. And to do that, what we're going to do is we're going to debit our motor expense account and we're going to credit our suspense account. Now, what that does is that brings our motor expenses account balance down to 0. Okay, our bank is still sitting correctly at a £2,000 credit, and our suspense account now, obviously it originally had this 4,000 debit, but we've credited it now for 2,000. So what we've ended up with is a 0 balance on our motor expenses, 2,000 credit in our bank, and still 2,000 within our suspense account on the debit side. Because obviously if we balance off the debits and credits, that would still give us £2,000 on the debit side of the account. So that is step 1. Okay, and the journal entry for that would look like this. So you can see that we've debited our motor expenses and we've credited our suspense account. Okay, now the next transaction is basically going to be the exact same again. Okay, because remember, we're trying to get our motor expenses account to a £2,000 debit balance. Okay, so what we would do is we would further debit our motor expenses for £2,000 and we would credit our suspense for £2,000. So the effect of this second transaction would be that now we have a debit balance of £2,000 on our motor expenses account. We have the correct £2,000 credit in our bank, as it always was, and our suspense account has now been reduced to 0. And the journal, let's update our journal for the second transaction, would look the same again. Okay, now there will be some of you, and this is what I want to address, thinking, so why have we done it twice? Why did we not just debit our motor expenses for 4,000 and credit the suspense for 4,000? And it is an extremely valid question, okay, because, and the reason why we don't do that, because although you would get the correct balances in both accounts, what it means is if someone else comes along, someone within your finance team, and they're looking at these accounts, it is much harder to identify the transactions against each other. Okay, let's say I'm looking at this motor expense account and I can see there's been 2,000 gone in on the credit side and then fairly quickly £2,000 gone in on the debit side. I can straight away in my mind think, I bet that relates to that particular transaction. I bet that that's being reversed in error. Okay, whereas if you put 4,000 in, it's hard. All right, the numbers are quite nice, but obviously in the real world, you're going to get some real funky numbers out there that don't sort of relate to each other at all. So by being able to see the same number going on the credit and debit side, it's much easier to identify, oh, I can see that that's been matched off against that. It was probably an error. You open up the detail and it'll probably say in there that it was a journal entry and that there has been an error. So in this one, I've got in correcting motor expenses posted as a credit. Okay, and that is sort of what we are sort of finishing off with today in the session. And that covers off two different types, as I've said, of journal entry. So we've got one without a suspense, one with a suspense. However, the approach will always be the same. You need to look at what's gone wrong. You need to look at what should have happened. And then from there, you're in a position to go, right, that's what's happened. That's what should have happened. How do I get from there to there? Okay, and we do that, or I would recommend doing that through T accounts so that you can see that all the balances work out like is on screen now. And then I would transfer that information into a journal. Okay, brilliant. So that sort of wraps up what we're covering within the session. However, I'm sure there will be some questions, Jaden. If you want to bring those up, happy to answer those.
Yes, certainly. So again, we are going to wrap up shortly, but again, do want to go through any questions that you guys might have before doing so. But yeah, let me start with the ones that have come through. Rodica asked, which book of prime entry must a sole trader keep?
Well, in terms of your books of prime entry, everyone would need to keep them. Now, granted, in a modern day account system, it does work slightly differently because you enter in your invoice and it basically does that step for you. Whereas traditionally in manual bookkeeping, you had, a particular page or whatever it would be where you would have your day book and then you would transfer the totals across into your ledger. Now, obviously, because we're now on electronic systems, very few people using manual bookkeeping systems now. That step has been done for you. So for anyone who works where you're entering in invoice, etc., you'll know that you enter it into the system and it automatically posts it to the correct accounts. So in terms of what a sole trader should keep, it's no different from, you know, a limited company, a partnership. You know, you would effectively all do the same thing in terms of posting your expenses, your income, etc. So it's not that they have to keep a specific book of prime entry. You'd be keeping them all. It's just within an electronic system. Okay.
Okay, nice. Hopefully that answers your question. Natalia, I just wanted to double check that the payable account and the purchase account are separate, right?
The purchase account and payable, yes, absolutely. Yeah. So your purchase account would record the net amount of the purchase. So without VAT, your payables accounts would show the gross amount, so the total amount that is owed to that particular supplier. That hopefully answers that one.
Okay, perfect. Diana has written, so we need to add all of the transactions first in the journal, and then add the transaction into the right account, and then all of the accounts we found into the general ledger.
That's right. Yeah, absolutely. So basically, you've got all your different accounts that sit within the general ledger, and then what you would do is, if you needed to put a journal entry in, you would do as I've done here. So it can come in different formats, but you know, typically now it's going to be an online system, and you would enter in your details. So you would select your account. So that could be, as you know, we may as well use the ones that are up on here. You would select your motor expenses. You would select your opposing account, whatever it may be, and you would then select whether you wanted to debit that account or credit that account, and then the relevant amount. Put your description in, click post, and like I say, that would either go straight into the system, or it may be, depending on size of the organization, etc., you might have someone that needs to approve that before it is entered into the system. But either way, that's just an additional step, but it would post straight into those particular accounts. And then your nominal ledger, or say general ledger, is made up of all these different accounts. Hopefully that answers that one.
Okay, perfect. And Victoria has asked if you're able to briefly run over journal for payroll, specifically employer's allowance, and which side this would sit on.
Okie dokie. So my colleague did a session on that one. I wouldn't be able to run through that as a whole now, just because it forms quite a large journal. So I wouldn't. Apologies, because it is a great question. I would need to sort of show it on screen, because there's a multitude of different transactions that go into that one, and it really is a session by itself. And I know it's something that people do struggle on. So please don't worry. But yeah, it would, unfortunately, that one I would need to sort of do it as a full scenario.
Okay, that is no problem at all. Yeah, it's probably one that takes a good amount of time. Moonflower Cathers asks, the credit amount of 2,000 is for the bank account. Is that a journal entry?
No, so that one would have been posted through when you were doing your day books. So when you put the original entry in to your motor expenses and bank account, that would have been recorded within your purchase ledger day book, and that would go through your purchase day book and get entered in that way. So it wouldn't be through a journal, that first entry. It would just be the correction that is done through the journal. Okay.
Yeah, okay, perfect. Let me just double check to see if there is anything else. Someone has asked, which software can you use when using journal entry?
Oh, they pretty well. I would have thought they all do it. I mean, your common ones, that people use these days, more popular ones. You've got a range, haven't you? Sage, Zero, QuickBooks, Free Agent. I think FreeBooks as well is another one. BrightPay bringing out their own software as well for accounting systems. There's absolutely loads these days. Obviously, then you've got your really big systems that aren't online systems, but actually sort of more server-based systems for larger organizations. The main two being, SAP, very popular. Oracle is another one that's really popular. Microsoft do their own now, Microsoft Dynamics, but they will all allow you to do journal entries.
All right. I think that pretty much wraps it up. We do have a few people saying that it was really clear and just wanted to thank you for the session. So just wanted to relay that to you as well. But yeah, again, want to extend our thanks as well. Many thanks for coming back, especially at such short notice. Again, the people really seem to enjoy your session. So yeah, really glad to have you on.
Fantastic. Yeah, again, thank you for everyone who's joined and asked questions as well.
Many thanks. So before we go, also, Will, is there anything that you'd like to add or promote business-wise before we start wrapping up?
Covered. I think covered to a certain extent of what we like I say, we deliver distance learning courses from level 1 through to 4, and like I say, we write our own material that is specific to distance learning, so it is designed for people wanting to go down that route. It sort of joins together with a mixture of written material and videos and assessments and mock exams. So yeah, if you're interested, go take a look.
Yeah, no, absolutely. And also, just want to highlight, Will does have a YouTube channel. I know he's modest and didn't want to push it, but you can find him at Will Boardman on YouTube if you're interested. He does similar stuff on his YouTube channel. So yeah, check that out. But also check out our YouTube channel, Your AAT. We're going to have this session on there. So these sessions are recorded. These sessions can be found on Facebook, but again, also on our YouTube channel as well. So that is at Your AAT. You can go ahead and this session will be up there, as well as various other sessions that we've done on a number of different topics. But again, if you want to find us elsewhere, we're available, of course, on Facebook as you're here, but on Instagram, our handle is at YourAT. You can find us on LinkedIn, you can find us on Twitter, and you can find us on TikTok as well, all at YourAT. So yeah, definitely take a look. But want to thank everyone for joining, and we will see you again soon. Bye for now.